Okay, today we're going to go into a talk about banks and not necessarily the banking system, more about practical what banks do, what you might use banks for, okay? Not really the overall banking system. So the words we're going to need today are FDIC, Federal Deposit Insurance. It means your money in certain accounts is totally safe. A debit card. It's a card you use that's linked to your checking account to pay for things. The money comes directly, almost instantaneously, out of your checking accounts. It's not a credit card. Works the same way, but not a credit card. A savings account is an account where you put money to save money. It is a low, almost no interest storage account. It's possibly one of the worst places to actually save money, but we do use it for one or two things. A checking account is basically a no interest storage account. Your money does not grow, but you can move money in and out to dollar bills. It's linked to your debit card and checks, so it is an instantly accessed liquid money account. Certificates of deposits, CDs, are longer-term savings accounts where you promise to keep the money in a little longer. They give you actual kind of real interest returns. There's something out there. It is phone pay. There's a couple different platforms where you use your phone to pay. This is unknown to me. I know in theory how it works. I know none of the details. It is, of course, the wave of the future, so we're going to have to look into it quite a bit. And we have internet pay sites, example PayPal, of which you can put money into the sites and pay over the internets. Okay, so let's go into bank services, what pretty much every major bank does, and other banks or credit unions. I should have put that in the definitions. Let's go back. A credit union is a bank that is owned by the members. It's not a for-profit bank. It's a bank that's owned by the members. Oh, and by the way, the notes, the major note, shop around for the best banking products. Okay, banks offer 4, 5, 6 different products for your needs. Shop around for the best to save the most money. And in almost every part of interacting with a bank, you should be able to interact without fees unless you're borrowing money. Don't pay bank fees. Okay, so these are the services pretty much every bank has. One, they store items in what's called a safety deposit box. Now, this is, you are going to have to pay a fee for this, but it's for a special service. You're never going to get this one for free. Physically, you can store items, and banks have vaults. Banks have vaults. They're some of the safest I can't think of a place safer than a bank vault. Bank vaults don't get robbed unless it's George Clooney and Ocean's 11, okay? And Julia Roberts and all the other famous actors that are just like breaking into a bank, a vault or something. Like they don't. When you hear about bank robberies, it's someone going in, getting some money from the register, leaving, and getting arrested later. Almost all bank robberies get arrested. It's like the worst crime to think about doing. You're just not going to get away with it. So pretty much the safest place you can store items, whatever you can put into a safety deposit box. Banks also store your money, not your physical money, just the amount of money. Banks will store your amount of money, and they do that through savings accounts, checking accounts. Certificates of deposit is a money storage account. Okay, so banks can hold your money, and you can put money into those accounts and take money out of those accounts. Banks make loans, and in fact, that's their biggest business, loans. So they give home loans called mortgages. They give just personal loans, just borrow money. They give loans for new and used automobiles. They give loans if you own a lot of your home. They give loans based on how much of your home you own. That's called a home equity line of credit, a HELOC. And banks are not the only places that do mortgages, personal auto, HELOC loans, okay? There's other places that do loans, but banks also do them. And something here, banks back credit cards, which is a form of loan. Now, you don't have a credit card, you probably shouldn't have a credit card, but banks do it, and they make a lot of money. If banks make a lot of money on it, that means someone's losing the money, and it's you, okay? Banks also offer retirement account services, okay? You can manage your retirement account through banks, and they have professionals that will help you. Let me just say this about it. One, banks are one of many options. it may or may not be the right choice for you. Okay. A bank financial advisor is hired by the bank. It's their job, and their job is their life, and they might or might not be good. And I'm sure they are fiduciaries. I'm sure they have to have your own best interests. Otherwise, it's illegal. But there is also independent financial advisors. They can do it too. They're fiduciaries. It's not a job. It's actually their business. So I'm not going to recommend. All I can say is I use financial advisors for various reasons, and I don't want to sway one way or the others because I do believe the financial advisors of banks are legitimate. They are a legitimate option. So you have to decide if they're right for you. I use financial advisors. I also noticed that many banks offer free coffee. And this is mostly just kind of a joke. You don't go to a bank, the physical location, enough to actually make the free coffee worthwhile. I suppose if you're really serious about this, you could figure out a way to go to a bank every single day, get a cup of free coffee, even twice a day. If you are a person who goes every single day, that's not normal. And if you're going twice a day, one in the morning and one after work, you will be known as the person who's abusing free coffee. I don't know if you want to do that, but I just thought of it. It could be kind of funny. Some banks and credit unions they give free money, just straight up free money for kids, K through 12. They have kids account and they give them free money for report cards. And it's just free money for your kid. You could probably get a couple $100. I know you can. If you start a kid in like first grade, by the time they're 18, they could have a couple $100 in their account. Why does the bank do it? Well, the banks want you to be a one-stop for life customer. They want you to use all their services. And sometimes banks offer free money for opening accounts. And you keep your eye open. It takes a couple hours. It takes a couple hours and a bunch of organization, but you can make $150 or $200 a year by opening new accounts. Just make sure you're not paying fees and staying with that account for a year and then closing it and moving it somewhere else. I don't know if that's considered cheating the system or not. The banks are offering it. It is totally legal. It is a little bit of work, but you could probably make 100 to 150 every couple years because banks offer free account opening bonuses. Okay, now I've been using banks, but I could use interchangeably banks and credit unions. They're the same thing functionally they're the same thing. There's very little difference between them, but functionally they work the same. Now, a bank is a for-profit company with stockholders. Oftentimes, shares of the bank are sold on the stock market itself. Okay, the bank's purpose is to make money. And credit unions, they are owned by the members. Okay, their purpose is to provide services for the members and not necessarily to make money. And if they do make money, they spread that money into the members. Now, you would immediately think that credit unions would be much cheaper than banks because banks are for profit and credit unions are nonprofit. Now, that's not necessarily true, okay? If credit unions were that 100% better, everyone would use a credit union, okay? Banks find ways to be competitive with credit unions. I'm not 100% sure why. It could be with how much credit unions pay their employees. It could be scale. Credit unions are usually local. Banks can be national or international, so they might get cheaper stuff. I don't know. All I can say is it is not guaranteed that even though the members own credit unions, it's not guaranteed credit unions are cheaper. Every single bank or credit union has their own products, and you have to shop around. There are advantages to each. Let me give you the quick story of credit unions. There's always been banks. What usually happened was members of a certain workforce, let's just take teachers. Teachers in an area got together years ago and said, well, why are we shopping at banks? We're so many teachers, let's just run a bank ourselves and call it a credit union. Okay? And we can save money. And so all the teachers got together in a certain area and did their own bank for themselves. Okay? And this truly was cheaper. And then the governments got involved and said, that's really kind of unfair because it's a regulated industry, the banking, and you're just doing it yourselves. And it's unfair if people aren't teachers. It's unfair if people aren't state workers. It's unfair if people aren't steel workers or something like that. And so then what it morphed into is each credit union, like Teachers Credit Union or State Employees Credit Union or something like that, each credit union is automatically open to anyone who works in the profession or anyone who lives within a certain miles from any of the local branches. And that way it's not discriminatory. So you don't have to be a teacher to be in the First Teachers Federal Credit Union. That changed to First New York, but it was originally First Teachers. You just had to be a teacher or have a teacher in your family or live within a certain mileage of the branches. Okay, now, people were scared of banks. Banks got to be big in the United States, and then the Great Depression happened, and a very specific thing happened that really scared people about banks. See, the thing of banks is they are in the business of loaning money. You deposit $100, they'll loan out 90 of those dollars. They just don't have all your money at all the time. And for many different reasons, a bank could go out of business. If everybody asked for their money all at once, the bank would go out of business unless they could get their money. And that's exactly what happened with the Great Depression in the late 1920s. Everyone got scared in the United States. Like everyone who used banks got scared in the United States. And so they went to their banks and said, give me my money. As soon as a couple banks started going out of business, all the banks went out of business. Everyone started going and saying, give me my money. The banks couldn't give them their money, and the banks couldn't borrow the money from any place else because nobody had the money because everyone is taking their money out of every bank. And so the banks went out of business, and everyone who's had like, oh, I had $400 in the bank, gone. The bank's done. How do you get your money? The bank's gone. And so anyone with money in banks, back in the bank run, the bank crash, the Great Depression, lost all their money. Now, people are like, holy crap, that's horrible. Why am I going to use a bank at all? I'm going to bury my money under my bed or bury it in the yard, okay, where no one can rob it, and then no banks go out of it. Now, this is a bad thing. The United States is based on borrowing to start businesses and to buy homes and to buy cars and to later to go to college. Okay. We are based on borrowing, and it's not necessarily a bad thing unless you borrow for bad things. This keeps our economy going. Banks keep our economy going. And the federal government said, we can't have this happen again. It crashed. It literally crashed the banking industry. People lost their life savings. It was a horrible time. Great Depression, people. So the federal government said, you know what? Use banks. People said, no, we're scared. Federal government, United States said, don't be scared. We guarantee your money. Even if the bank goes out of business, we guarantee the federal government will give you your money, no matter what. And so FDIC is the government insurance. It will insure your low interest storage accounts, your savings account, your checking account, your CD account. They are 100% insured up to $250,000 per individual, per account type, per bank. If your bank goes out of business, you can talk to the federal government and they will give you all your savings that you lost, all your checking that you lost, and all your stuff in your CDs that you lost. Okay? This will prevent another bank run. The banks won't go out of business because the federal government would have to go out of business. And if the federal government's going out of business, there was no place you could put your money to be safe unless you bought food prep. Food prep, and unless you got a bunker somewhere. Now, this is one of the reasons why you're not going to make money in a savings, checking account, or a CD. They say it's called savings. It's not investing. The money you put in your CD or savings will almost never go above inflation. The best it is losing a little bit of money every year or staying the same. Because it's 100% safe and 100% steady every second of the day, you're not going to make a lot of money on it. Because it's 100% safe and it's 100% steady every second. But it means you can put money and use banks with confidence. Okay, here's some thoughts in no particular order about the banks. Mostly they are in the loan business, okay? They are not, they want to take in your money, and you put your money in a savings account, a checking account, or a CD account. They want to take in your money, and then they want to make loans, okay? The banks even back the credit cards, the things that you should never use because it'll get you in trouble financially. The banks are the ultimate source of the money for credit cards. So in the banks, every time they make loans, people pay it back with interest. So it's a whole little game. The banks are taking in your money. You give the banks $1,000. They give you like this much interest. You give the banks $100 every year. They give you $1 for giving them 100 every year. And then they loan it out and charge someone $4 per year on that $100. Okay, so they're in a borrow, manage, loan, profit game. Now, the banks can't loan out all their money. This is a reserve ratio. For every $100 the bank technically has that you've given them, they have to keep $10 like in a vault. They have to keep $10 just so to keep the things rolling. Okay. But they are loaning out 90%. Every time someone puts money in, they loan out 90%. Now, if you really want to blow your brain on this, like, just follow me here. Ignore me if this gets too complicated. It's called a money multiplier, I think. I think it's called a money multiplier. You give the bank a $100 bill. Okay, there's a $100 bill in circulation. The bank takes it in, saves 10%, loans out $90. Now there's $190 in the country. That person who borrowed $90 spends it. That person puts in a bank. That's $90 in a bank. Now it's $280 circulating. That bank loans out $81. Now it's $300 and something circulating. That person spends it. The person who gets it puts it in a bank. The bank loans out 90%. It's some sort of permutation. 100 to 90 to 81 to 72. All gets until it goes down to 10%. So a physical $100 bill actually represents something like 1,000 or more dollars in our system, the money multiplier. By the way, this is the magic button that I talked earlier about. The federal government says banks have to keep 10%. If they wanted to dry up the money, they would say banks had to hold 90% of every dollar in physical cash, right? And if they want to make more money in the country, they would say the banks don't have to hold any, and it could just keep multiplying to infinity. We could have an infinite amount of money in the United States if the federal government said, hey, banks, you can loan out everything again and again and again and again until infinity. And that would do hyperinflation, and our economy would crash within a couple months. Don't put the reserve ratio to zero. Okay, this is practical advice. Banks want you to use their bank for all services, and you absolutely can. Okay, this is a technique of grocery stores, a technique of a lot of places. Okay, have a really cheap service that gets people in, and then your other services might be a little more expensive. Okay, and so this had started earlier with free checking, absolute free checking. Some banks were doing it, but then they were making it because their mortgages, their home loans were a little more expensive, just a little. But see, someone gets a checking account in the bank and they use it as a one-stop shop. Okay? And so now you could probably get free checking everywhere, but it still remains that certain banks give certain things. Okay? Certain banks might do a really good return on their savings account because they want you at that bank, so then you borrow their mortgages or use their financial services. Okay, so what that means to you is if you don't want to go through educating yourself, and if you don't want to go through the time it takes to search the best deals, you can just go to one bank. It's convenient. You're going to pay more than usual, but it's convenient. If you want to save money, then you shop around. And now I'm going to say one thing. We're talking serious money, an auto loan and a house loan. When we're talking auto loans and house loans, we're talking, for house loans, thousands of dollars. Thousands. Auto loans, we're talking hundreds of dollars, which is a high percentage of the car. I think you should shop around, but it's your choice. You could possibly split your checking account. Basically, any bank has free checking. Any bank. You shouldn't pay for checking. Nothing. You shouldn't pay anything for your checking account. Should be free. Savings account. I'm going to be honest. There are these things called online banks. When you get an online savings account, they give you better interest. The difference from 0 to actually like 1 or 1.5%, it's significant if you're keeping $20,000 in a savings account. So usually you use online banks for your savings account. The same thing with CDs, certificate of deposits, long-term savings, up to 6 months or a year. Online beats local branches hands down. It's not even competitive. Online's the only way to go if you want to make money. For any loan, you got to shop around. Sometimes it's seriously cheaper for certain banks, okay? I got an auto loan from 2 different banks, one from one time and one from the other, because at each time, each one had a better deal. And this is really deal. You got to shop around for your house loan because it's so much money you're dealing with. Financial services, just like I said, every bank offers them, but remember you have a local financial advisor. Make sure they're fiduciaries. They have to legally do what's best for you. Okay, sorry, I want to go back and answer a question someone always asks. Everyone always asks this. Well, what if you have more than $250,000 in a savings, checking, or CD? Well, there's two answers to this. The simple one is it's per bank. So if you ever have $200,000 in a certificate of deposit account, just go to another bank and you get another 250. But the second answer and the more real answer is no one who knows anything about money has 250,000 in a checking account or a savings account or a CD. That is not where you put your money. So anyone who has more than 250,000 in one of those accounts is moneying incorrectly. So it's never going to come up. It's never going to come up. Okay, this one is kind of the same thing. It just adds a little more information to the whole pictures of the puzzle. So for your active account, your checking account, which is connected to your debit card, your active account is also where your paycheck electronically is going to be deposited, because that's what we're going to now. If you have a paper check, it's where you go and deposit it. So your active checking account, usually you get a local bank on that, okay, because you want to physically be able to go there, okay. It's the most convenient, should be in your local area. It should, of course, no fees for your checking account. They should have some no-fee ATMs where at any time of the day you can actually get physical cash. It should be no fees, okay? So there should be convenient ATMs. When I'm looking for for my active account, I am now looking for the best online tools. I want to be able to do my banking very, very conveniently. Like I'm going to pick something that has not just one account, but multiple accounts that I can label saving for a house, small emergency fund, saving for holidays. I want something that online I can specifically move my money into 5 different accounts. Not all banks offer that. I think credit unions, some do. Some banks do, but not all do. I want that because it's out there and I want that control over my money. Multiple accounts that are easily created and online shared. I want tools. I want online tools. I want when my paycheck is deposited, I want it automatically to split into the accounts without me doing it. That's an online tool. I want the online tool that every time I use my debit card, it rounds up. It's called rounding up. I want to, when I buy gas for $19.25, I want it to take 20 out of my account and put 75 cents into my savings account. I want online tools. I want things that help me force to save. I want things that automatically split my money when it comes in. I want automatic bill pay. I want the tools. So I'm going to have to, I'm going to have to shop around and see what those tools are, what's offered. Okay, I just gave you a lot of the tools right there. You should be able to find some. And I'm going to keep a portion of my emergency fund at the local bank, not even online, just at the local bank with ATM like that. I mean, I need a portion. Your emergency fund is 6 months of bills. I need a portion of that for the little emergencies. The majority of my emergency fund, I'm going to use online banks because that's where I can actually get some interest return. Okay, so I'll be using online banks for the majority of my emergency fund. A little note that you don't see any retirement accounts in online banks. I mean, you do, but I'm not using them. I don't see them very often. It's because when you're young and you're investing for your retirement, savings and CD accounts are too low. Remember, you're actually losing money or just treading water. You're not making actual real dollars. And so we don't see, we see checking and savings accounts for life, but we don't see your retirement in these banks because the retirement money's got to be put somewhere that's going to make a lot more return. Online pay services. That's something new. I don't use it. I knew it was coming since late 2008. Of course, in 2008, of course I know it's coming. I was reading all articles about how the phones are going to have near-field NFCs, near-field communicators, touchless payments, like to talk to the pay things. So what is it? Apple Pay? Google Pay? I don't know how it works. It is probably an amazingly useful tool. Someone's making money somewhere, but that doesn't necessarily mean you're paying for it in this case. I don't know if you fund an account and then use that. That would be so useful. So you can only spend what you actually put in. That would be great. I don't know if it's linked to your bank account, so you're using it like a debit card. I don't know. You're going to have to figure it out, because this is what I'll never use it. I don't think so. I don't even use a debit card. I do not even use a debit card. So the chances of me using a phone pay system is very, very low. You've got to figure it out. If you want help trying to figure out, okay, maybe do your own research and ask. Do your own research and then ask me. But you got to figure it out as you're going to be using it. Probably already are. Better figure out if it's a good thing or not. Sorry, you may have noticed that last talk was for phone pay. Phone pay. And I think I had online pay services up. Okay, I think I had online pay. Online pay services are like PayPal, or there's a couple others. PayPal's the biggest, I do believe. I think Google's getting into Google Pay now. I know exactly how that is. I know exactly how that is, okay? You either put money in and then you can pay online, you can transfer money between friends, okay? You can use it as a business processing thing. You usually link your bank accounts, which is fine if you create a separate bank account. I would never link my main bank account. Are you kidding me? To PayPal? Not a freaking chance. But you can make a separate little bank account and link it. So it's an online service that's linked to a physical bank account. It also links to a credit card, but you're not having credit cards, so don't worry about that. Credit cards will mess you up. It links to your safe bank accounts. And then you can use it to pay online, and you don't need a credit card to pay things online because you use like a PayPal service or another service, and it links to you. So it's a good way to pay for things online when they need credit cards, but you don't have a credit card and you don't want to use a debit card. Online pay's been around longer than actual phone pay. It's fairly safe as long as you don't link it to your main checking account. And finally, I want to talk about when you're doing the basics of banks, you should not be paying a fees. No fee, no cost for savings account, no cost for checking account at all, no cost to use ATMs, no cost to have a CD. None of those should cost money. No cost for the coffee inside of the bank branch location. None of those should be a fee. Do not pay a fee. There's so much competition out there. They shouldn't be charging you. Yes, you're going to have to pay for any loan, mortgages. There should be no fees for your auto loans, only the interest. Mortgages, you're going to pay some fees and there's going to be the interest. Okay, I get it. Financial services, you might be able to find some without a fee. That might be worth it. If you can find banks doing financial advice without a fee, that might be worth it. Typical financial advice is 2% of your account per year. 2%. You could find some at 1.5. So if banks or credit unions offer financial advice for free, that might be worth it if the person advising you is good and if they're a fiduciary. Or expect to pay a percentage every year of your account, and that's reasonable if a bank's charge that. I got to look in to see if banks do it for free. I'm still not going to use it. I like my financial advisor, and I do it myself, but that might be good if you can find a good advisor in a bank that's not trying to sell you something because there's a fiduciary and they don't charge anything. We'll see. We'll do some research. And that is it for an overview, kind of how banks work and the services they provide. All right. Thanks for watching.